Good morning. This is Mike Wade, and welcome to High Probability Short-Term Profits. I'm in an air-conditioned room because it's a bit hot outside here in Costa Rica. Back there is my view. I wanted you to share it today. I could put the camera against the wall, but I did want to share this beautiful place with you here. Now, the markets are like, something's about to happen in the markets, I think. I have an idea. I'm going to make a case with you here in a minute. We're going to talk about the markets. We're going to talk about last week's attempted trade on Levi's. We didn't get in. I'm going to show you what happened. And we'll also take a look at a current live trade on a company that you probably have seen on infomercials. I'll save that for a minute. We'll talk about our guidebook. Again, this is a live trading show, and I'm very happy to look at your stuff. So if you have a stock that you think is a cool sniper candidate, please do pop it into the chat box down below my face here. And my buddy Ryan will kick in later in the show, and we'd be very happy to take a look at your stocks. Okay, so let's take a look at the markets. I'm going to hop right in to the Hub software, and I want to show you a chart of the S&P 500. Now, there's other indices we could look at, right? We have, the S&P 500, we have the NASDAQ, we have the Russell 2000. We have the Dow Jones Industrial Average. There's lots and lots of indices to look at, but we tend to look at the SPYs, the ETF that tracks the S&P 500, because these are the 500 biggest companies in the United States. All right, so the big, healthy behemoths in some cases, those are the companies that we can get a good sense about. If they're doing well, the rest of the market is probably doing well, and vice versa. So I drew this channel last week, and here's our channel. And we've had this nice, bullish, beautiful, healthy channel, higher highs, higher lows, nice, orderly flow. That's a word you could use. And then this happened last week. And guess what happened? One of our Fed presidents, she's a governor actually, Michelle Bauman, for the first time came out and said, I think we might need another rate hike, not a cut. Everybody's expecting 3 rate cuts, and she's now beginning a dialogue around rate hikes. The CPI came in hot yesterday. The PPI is slightly better. So the markets are trying to figure out where we're going. It seems like a rate cut in June is not happening. It's crazy time. It's like markets want rate cuts. The Fed said 3 rate cuts 2-3 weeks ago when they had their last Fed meeting. They're coming up again. They're going to meet in a couple of weeks. The last day of, what month is it, April? And the first day of May 1st, there'll be an interest rate decision. All right? So cat chasing a laser pointer. The markets are very volatile. So what I have my eye on here, and this is some basic technical analysis that's very powerful in my experience. So this day here was when Bauman started talking about rate hikes. Okay, we had this big bearish bar down to the part of the channel. The volume was above average. That's a big bearish red candle. And up to yesterday, the market gets the SPYs within the body of that candle. What I'm looking for to derive, perhaps we're going to get a correction, is I want to see a close below the low. Let's zoom in a little bit more so you can see this. I want to see a close below the low of the volume spike day. This is the volume spike. That's the red bar. The closing low. We get a close below that point, and I'm seeing us taking a bit of a correction. I don't know how much of a correction just yet. Depends what the Fed will say. Down to the 50-day average to me seems quite possible, if not likely, but it's going to be based on what the markets do today after that PPI report came in saying that the wholesale prices or the producer prices have cooled off a little bit. So lots of tension, like an animal in a cage. The market wants to go somewhere, and I'm thinking possibly down. And what could be a catalyst? Well, take a look at what's coming up today on the docket. Fed presidents are speaking today, including Neil Kashkari. I always forget his name. Neil Kashkari, who last week also said, well, I don't think it's 3 rate cuts. I think it's 1, maybe by the end of the year. So that is potentially going to move the markets today. We have to wait and see. So volatility, if you're bullish, be careful for now. Wait for the markets to recover and start making new highs before I would go bullish. We're very toppy. We could see a pullback anytime. Now, the good thing about snipers is, although it's important for us to have a feel for the overall market, it doesn't really matter because we're opportunistic. We're looking for good news, bad news, strong technical moves, either up or down. And we come in and we sell short-term, high probability credit spreads to, just like a sniper, to snipe profits from a relatively safe distance with high probability, typically around 90% probability. The system itself has a run rate. Since we've been doing these live in public, I've got my own performance, which backs this up. But in our live snipers public shows we've been doing, we're averaging 90% wins, 10% average gain over a 7-day hold time. So 10% every 7 days, with the losers baked in, with losers considered, 10% every week. You could literally take $500, make 10% in week 1, take that same money, make 10% in week 2, take that same money, make 10% in week 3, take that same money, make 10% in week 4, do the math, that's 40%. Okay? So that's aggressive, right? So let's say you only made 10% a month. If you did that every month for a year, that's 120%. So the reason I bring this up is the idea of 10%. Who cares about 10%? Well, when you stack them and you have high probability of making a small amount of money, relatively safe, 90% win rate, you're going to lose 1 out of 10, rock and fire, follow the system. And that will add up and make a dramatic difference in your trading account. And that's why we're here on this show every Thursday at 9:15. What we want to do at MWTC, Michael Wade Trade Coaching, is to share the wealth and share what I've spent 25 years learning and mastering and teaching and coaching. And this is an expression, a personal expression to share. And so our hopes are that you'll join us every week. Now I'm going to get into a live trade here in a minute. We've got 7 minutes before the market opens. But there is a guidebook. So since I'm on the topic here, Ryan, credit spreads are not, I wouldn't call them, it's not a complex strategy, but it's more complicated than buying a call option or a put option. So it's the next level of complexity. But with a little bit of help, you can master them. And so this guide is a 5-step process guide that walks you through everything that I do Thursday mornings at 9:15 Eastern Standard Time. So I encourage you to grab the book. It's free, and go through it. I think it's nicely put together because I wrote it, but I really paid attention to keeping it as digestible as possible and as simple as possible, and yet have enough meat in there so that you can follow along with me and perhaps be one that starts to master the sniper approach. We have a community of snipers, and we did a challenge in January, and many novice traders, and none of the people in the challenge made money. So that's what this is. And Ryan, last we're talking about Levi's, and we put a trade on, and we weren't able to get what we wanted on the trade at the open. And so we had a line in the sand on Levi. Levi had came out and blew out earnings, and the stock gapped up. It came down a little bit, and we put a line in the sand right here at 19. And the idea there is that we wanted to make money above 19, and we put an order on to make at least 11% max profit on the trade at 19. And so we put the order in to fill for 10 cents. Didn't fill in this particular case. So we don't have a trade from last week. But the lesson is let the trade come to you. What's your line in the sand? The line at which you want to make money above or below. Ours was 19. We want to make money above 19, but I want a certain amount of money for it. And we put an order in for that amount for 10 cents. Didn't get filled. Okay, next. What's next? That's the game. That's the game. I want to show you quickly before we look at our live trade, because I forgot to mention this. I did mention it about our performance, but we've had a win streak here, Ryan, of 12 straight wins, averaging about one a week. We didn't get one last week. 12 straight wins. Our average profit per trade on the bottom right there is 14%. So we're making 14% every 4 days. Average trade length, where you see the green cross there, shows 4 days. Now, we haven't had a loser yet. We're going to get one. All right, I'm not trying to tell you this is a 100% system, but we're on a streak. You know, Ryan, the thing about streaks when you start talking about them is that's when they end. I shouldn't have brought this up. You know what I mean? Like
yeah, the old jinx.
Yeah. So it'll happen, but again, all of this has been done live here, and it's real stuff. It's real stuff, and we're very transparent about our results. And when we have our next loser, we'll definitely be talking about it. Okay, so here's the new trade of the day. LoveSac. Ryan, is it just me? But when I hear the word LoveSac, and by the way, they make these beanbag chairs. They look really comfortable. But when I see LoveSac, I think of that B-52 song, Love Shack.
Oh man, absolutely. That's every single time I start singing it in my head, I'm starting to forget that the actual name of the song was, or not name, but like the actual song was Love Shack, not LoveSac.
Oh man. So I could sing it, but I don't remember the song too well, but it's running through my head right now. All right, so LoveSac, Love Shack came out with crappy earnings. They missed their earnings. They make beanbags, nice ones. The stock pre-market was trading. Let me see. Let me pull up. So this is the Hub's charting software. It's really freaking cool. It's got a lot of bells and whistles like Elliott Wave and many, many other types of indicators, including AI signals, which we'll talk about in the coming weeks. That's a new thing that was added. And I do want to talk to you about the AI signals that we've been using with these credits. And we're doing better with AI than we are with already our well-performing portfolio. And we have a way to make it even better. So stay tuned. We're going to be introducing that in the coming weeks. AI credit spreads. What? Artificial intelligence in the trading world. Yeah, it's here. We've tested it. It's awesome. And I can't wait to share it with you. Okay, so where's the stock pre-market? I'm in the Hub software. Now I'm going to come over here and say, I want to see post and pre-market pricing. Okay, so I've just selected a 3-minute bar. I could have picked, 5 minutes. Why don't we just do 5 minutes? Whatever, or 15 minutes or 30 minutes. Okay, so the light blue section here, where's that green? Light blue section here was post-market. So the market closed here, and the stock did nothing, and we're off. Here we go. And then they came out with earnings this morning, and then pre-market, the stock gaps down, and then went further down. So the earnings happened, and now the stock is opening right down here around 19. Okay, so now that we have the open and know where it did open, right down here at 19, it's doing a bit of a bounce. Good one. The question then becomes, where's my line in the sand? What does that mean? Well, where don't I think stock's going to make it back to? Well, yeah, I think 50. It won't make it. There's no premium way up at 50. You have to get somewhat close And so what I'm looking at here is with this bad news, and you can see the bad news there. Ryan probably posted that already. I don't see the post. I don't see the screens that you see. But they came out and they missed their earnings. Okay, so they didn't make as much as they said they'd make, and the stock's being taken behind the woodshed and beaten. There's a bounce off 19. I think we could get a bit of a bounce here. How high might it go? Well, I think 22 is probably going to hold it. And then we have the 200-day average, which is this blue line, the dark blue line, that will hold it. That's resistance. We have the 50-day average, which is the red line. That's also resistance. We have 24 as resistance. And then 25. Maybe we could get something at 25. So what that would mean is we would sell a credit spread that would give us this profile. Make money anywhere below 25. Go ahead and rise. As long as you don't rise $6, then we're okay. So we make money even if the stock rises $6, we'll make it if it goes sideways, and we'll make it if it tanks to zero, which it won't do. But if it tanks, we make money down, sideways, and up. And that's where the probability comes in. Couple it with bad news for the company, and you have, probability doesn't get any better than that. So that's the trade I want to try for. And if I don't get it, if there's not enough money, then I'll start dropping my line in the sand and get closer. And I'm not going to go any lower. I might go 22.50. We'll have to wait and see. But up here, depending on the strikes, we'll look at the strikes here in a minute. All right, so let me go back to the plot here. We're going to try to get a trade on for 25. The line in the sand at 25. So I'm going to pop into a simulated Thinkorswim environment. All right, this is a brokered environment. I'm not promoting Thinkorswim. For me, it's a good platform because it allows me to simulate in front of you and not trade real money. I'm not allowed to trade my own money on the trades that I do with you here. Okay, so what I'm looking at here is the option chain, and there's April 19s, which is 8 days, and then I've got May 17th, 36 days. One rule of snipers is 2 weeks max, maybe 21 days, maybe 3 weeks, but I'm not putting a 36-day trade on. Anything can happen in 36 days. We know the Fed, now know the Fed meets the last day of this month and the first day of next month. There'll be dialogue around rate cuts. I'm not interested in hanging out that long. So the only option for us here is 8 days. Okay, so I'm going to come in here, and this is the trade that I've actually put on pre-market to see if I could catch it. All right, so what I was trying to do was sell the April on Love, the symbol's LOV, sell to open, a Love, April 19, 25 call, and then buy the next higher call. That's a credit spread. What's a credit spread? Get the manual. It's in there. It'll tell you what a credit spread is. So I don't have time to teach. That's why the manual's there. I'll teach as much as possible, though. So I put the order on pre-market for 50 cents. Why 50 cents? Minimum. Credit is 10% of the width of the spread. All right, so that's 30 minus 25 is 5. The width is 5. I want at least 50 cents. And they're going, nope, I'll give you 2.5. All right, I don't want that trade. I don't want it. So then I go back to the option chain, and I'm like, well, how low do I need to go? Okay, so if I go to the 22.50 25 call spread, there's only 20 cents there. All right, if for me to make any money on this trade, again, I need. Actually, hold on a minute. I just saw something. I didn't. I was moving too fast. This here is a 25-cent spread. 250s. Come on, Mikey, slow down. I get excited. I love this game. This is so fun for me. So we could sell the 22.50 and buy the 25, and that's 2.5 points, $2.50 wide. So I need at least 25 cents. So I'm going to ask for 25 cents. It's only worth 10 cents, though, at the moment. All right, so there's not enough there. So let's go back to the stock chart, and let's see if we want to think about going down to 20. No. 22.50 is the lowest I would go. So we're going to put an order in with our line in the sand at 22.50. That is below the 200-day average. That's this bright blue line. It is below that, but it's also at a really strong support resistance level. Look where the turning points are here. Support, 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 resistance, support. So if it does recover, that's a good level to hold the stock. In addition to 21, which is resistance now. 20 is resistance. 21 is resistance. 22 is resistance. So we still have multiple resistance levels between us and where we could lose money. So that's our trade. That's as close as I want to get. And so for that reason, I'm going to set my price here. And I'll give you the order here in a minute. I'm going to set this at a limit price of 25 cents. Okay, it's worth 10. All right, I'm going to let this trade come to me. I'm either going to get it or I'm not. I'm either going to get it or I'm not. It's at 15 cents. Let me tell you one other thing. This is the other part of it. Because I see the stock bouncing off of 19. Look, the low here is right at 19. Looks like it might want to come up a little bit. Good, come on up a little bit. As the stock starts rising, then what happens to the available credit? It starts rising as well. So there's 15 cents right there. A little bit further up in the stock, and we can get our 25 cents. Let's put a hook in the water for 25 cents, and maybe we're going to catch some LoveSac. All right, so I'm going to confirm and send it, and I'll let that sit there for today. Again, the adage I love is let the trade come to you. Look, now the mid price is at 20 cents. Yay. Go ahead and bounce LoveSac. A few more points up in the stock price and we'll probably nab our 20 cents, 25 cents, unless we don't. So here's the order then that I just placed so you can really clearly see it. We're selling the 22.50 calls. Let me update my spreadsheet. We're selling the 22.50 calls and we're buying the 25 calls. Okay, so this is the credit spread. And we want a minimum of 25 cents. And then the most important part is when if the stock recovers, we got to know when to get out for a loss. Number one trading rule is manage your risk first. Manage your risk first. And the way we're going to manage our risk here is if we are filled on this, then we're going to get out of the trade if the stock closes above the short call, which is 22.50. That's discrete. The stock's either above 22.50 or it's not. All right, so if it closes above 22.50, you take your hit. 1 out of 10 will be losses on average. And the other one, the profit stop, which I talk about second, is to buy the spread back for 10% of the original credit. So if you get it for 25 cents, you put an order in to buy it back for 3 cents, just over 10% of the original credit, and you'll nab 22 cents or 90% of the max profit in the trade. That is it. Nothing else to do. Once you're filled, you don't even have to think about it. Just look. Is the stock above 22.50? Nope. Do nothing. Yeah, but the stock's there's news coming out and maybe at that. Nope, forget it. Only if the stock closes above 22.50. Rules-based trading. The results I've shared with you week over week for the past handful of months has been solely generated with rules. Okay, so that is the trade of the day. Ryan, we've got a few minutes here. Do we have any other student trades to take a look at for today?
I saw one earlier that was KMX.
Carmex. Carmex is up the street from you in Richmond, Virginia, Ryan.
It's a little ways up there, but it's up there.
Yeah, it's up there. Yeah, yeah. I went to school at NC State, and my dad used to live in Richmond, so I know that
cool.
area pretty well. Yeah, it's really pretty up there. But Absolutely. We don't care where Carmex does business at all, do we? Oh, baby. I'm loving this one. Whoever sent this one in, good job. So first off, the gap down is compelling, right? But the thing that caught my eye was the stock just gapped down below the 200-day average. This very bright blue line. That's solid. That's one of the strongest support resistance levels available. It's beautiful. So that means I can sell above this line and the stock is pretty close to it. So the question I have is, well, something bad happened. And so what I'll do is go to, I don't know, you can go to Yahoo Finance. There's news everywhere. You can get it in Thinkorswim. You can get it everywhere, anywhere and everywhere. Carmex. And let's see what the news is on Carmex. And I happen to know they announced earnings. And let's take a look here. Carmex slumps on more than just earnings miss. All right, so they missed their earnings. And what else? Let's take a look here. Let's see. Let's just dig in. Let's understand a bit more about what tanked this stock. Missed financial targets for its fourth quarter and said it was extending its time frame goal to sell more than 2 million units annually. In essence, they're saying it's going to take us longer to make the amount of money we told you we were going to make before. So that's being deemed as lowering future guidance. They missed their earnings per share. They didn't make as much as they said they would. And they said, we're not going to make as much as we said we would in the future either. And so that has plummeted the stock, and I'm digging it. My line in the sand that I want to consider now, I would go to 75, but that's kind of hot. I like 80. This is a good one. This is a really good one. I like 80. All right. So my line in the sand on this one would be 80. I think 75 is probably going to work out, which is right here at the 200-day average. To me, that's a little close. I want to be above 75. If there's 77.50s, I would do them, and 80 I would do. So let's just see what's there at 80. And given the stock is not too far below 80, only 9 points below 80, I think we might see something here. So this is part of the process now. We're doing a lot. This is live, y'all, if you don't know that. And so 80 is way up here. Let's see what pricing is available now. And on Carmex, we have expirations for April 12th, which is tomorrow. April 19, that's 8 days. April 26 is 15 days. So I'm going to try for 15 days. 15 days is generally where I like to go. And then I'm going to check to see what kind of money is available there. And I can see here, if I sell the April 26 80 calls and buy the 81s, not enough money. Okay, so what does that mean? Well, first off, the minimum price I want is 10 cents. And I see 5. Okay? If Carmex bounces, we have a shot. But 80 is actually really conservative. So what I would do here then is let's come down a little bit. What if we dropped it to the 50-day average right there? Let's call that 79. 78. I'm going to do 79. Let's go down one strike at 79, dropping the line in the sand a bit closer, adding more potential profit to the trade or more credit to the trade. And so I'm just going to drop it to 79. And not seeing any premium there at the moment either. That's 2 cents. This would have been good to do at the open. So I'm going to have to keep dropping it in order to make any kind of decent credit on this one. So let's see how low we want to go here. Let me take a look here. This is live. What about 78? Right there. I'm seeing the stock finding support at 70. Looks like it wants to breach it. 78. That's as low as I will go on this. I'm not going any lower. I look at 78. I can see over here that 78 was resistance. It became support here. Support has been breached. Old resistance becomes new support. That's as low as I'll go. So at this stage, what I will do then is set my line in the sand at 78, selling the 79, and I'm going to put a line in the water, a hook in the water for 10 cents. And I'll do one contract here. So if I sell this $1 spread for 10 cents, that's 10% of the spread width, $1 spread width. We'll get 10 cents. That's cool. And then my risk would be the distance between the strikes minus the credit. 1 minus 10 cents is 90 cents. So the risk in this trade is 90 cents. And if I wanted to contain my risk to $4.50 times 100 for the shares controlled would be 450. I would do 5. So by putting this trade on here, I've calculated my max risk in the trade, which is 5 times $90 or 450. Okay, that's in the guidebook as well. So if that math confused you, don't worry, it's in the guidebook, and I repeat it every single week. I'm going to confirm and send that one. We're going to drop this hook in the water, and I've got 2 trades on now. The first one we put on, I'm seeing 12.5 cents, and I won 25. That's all. That's what I'm going to take. That's all I'm taking. And on Carmex, I'm seeing now the mid price is 7.5 cents. I won 10. That's my trade. I'm letting these trades come to me. All right. So I think we have a good chance of getting filled on both those. I'll track them today, and I might even go after them again tomorrow, depending on what the stock does. So on Snipers, on the live show, we look at stocks that happen to have news on that particular day. And some days there's more than others. The good news, though, Ryan, we're approaching earnings season. We're in earnings season. And as we approach the end of April and all of May, the fish are going to be jumping in the boat. All right. With that, everybody, thanks for hanging out with me again on this Thursday, every Thursday at 9:15. We do live trading, fast paced. Yeah, a little bit. We have a guide though. We have a guidebook. Go ahead and grab it by clicking the link below, and maybe read it next week. And next week we can snipe together. All right. That's my time. Have a great week, everybody, and we'll see you next week.